Today is Monday, March 27th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Alan, the stock market is down significantly this morning, and recent politics in Washington has had a negative impact on stock index futures over the past several days. Is this temporary, or is this the beginning of a bear market?
No, this is not the beginning of any new bear market. This is only a temporary situation. As we have seen in the past, in fact, since the lows for the indices were made in March of 2009, anytime there was a geopolitical problem and a stock index break, each and every time we did come back making new highs, in fact, some new historical highs. So I view this break as a buying opportunity, and within the next couple of months or so, I think we'll see a new round of highs across the board in all of the major stock index futures.
Turning toward the dollar, why has the U.S. dollar come under pressure this year in spite of the Federal Reserve being the only major central bank that is likely to increase interest rates in 2017?
Well, the reason is even though the Fed will probably raise at least 2 more times, other central banks who have been very accommodative are likely to become less accommodative, especially the European Central Bank, we believe, is going to back away from its accommodation later this year. And even the Bank of England is probably going to raise interest rates in the middle of 2018. So the interest rate differential advantage that the dollar has enjoyed, especially last year, is no longer there. So I would expect the dollar to underperform probably for the balance of this year.
Speaking of interest rates, after making a 21-month low earlier this month, the 30-year T-bond futures have been able to bounce due to the bullish influence of the political uncertainties in Washington. What is the outlook for the 30-year T-bond futures now?
Well, usually when there's a flight to quality move, it does not last very long. I think once the politics settle down, at least to some degree in Washington, we'll see the dominant inflation influence take over again, and I think that will be a negative that will be powerful enough to take the bonds to not just lows for the move, but actually to new lows for the move.
Steve, let's talk grains. Corn, soybeans, and wheat prices have all traded lower since the USDA March 10th report. Why is that?
I think USDA confirmed that we're going to have large global supplies, record crops in Brazil, both corn and soybeans, and good, almost record crops in Argentina. So I think the market is taking off some of the risk premium because there's too much supply.
Corn, soybeans, and wheat prices have traded really near key support levels lately. Are these markets oversold? Do you think the support will hold?
I think the concern is, even though that we're oversold technically, that prices, especially in soybeans, are above a year ago, and with bigger supply globally, we probably could work prices lower. So now we're going to get into a report at the end of the month that will show how many acres we have, and we'll kind of be watching the weather. But it feels like even though we're near support, we're probably going to trade below that support level.
Talking about the report on Friday, the plantings report, first one for 2017, what's the market looking for in that report, and how do you think prices will react?
I think the market is looking for farmers to plant about 3 million less corn acres and 4 million less wheat acres, and maybe 5 million more bean acres in 2017. Recent talk by the farmers that they might plant a little bit more corn than the average guess. We're also looking for higher stocks than a year ago, and the corn stocks could be record high. So the report should be negative, and the funds should trade at negative.
What about weather? What's the outlook for U.S. spring weather, and what about weather down in South America as we approach harvest there?
Well, this week, the Southern Plains, which has been dry, is supposed to get some good rains, and also the Midwest is going to get rains. So the key is what happens after that. Is this, do we dry out, or do we start or continue to get normal rains? And the National Weather Service 3-month outlook calls for normal rains and normal to above temperatures, which would be ideal for spring crops. Down in South America, Brazil is dry for the bean harvest. They might be getting some rains down the road to help the second corn crop. So their outlook for a record crop seems to be pretty solid. In Argentina this week is going to be wet, and we'll be kind of watching that to see if that impacts their harvest down there. But in general, Northern Hemisphere global weather for the spring looks good for crops.
Alan, earlier today you mentioned the gold market to me. What are your current thoughts on gold?
Well, of all the markets that I'm covering, I think the gold has the most bullish fundamentals right now. In the stock index futures and in the dollar index, some pressure developing with the political problems in Washington. But that is all the more bullish for the precious metals in conjunction with the inflation influence. So gold and silver have the best fundamentals. They're all lined up to the bullish side. And I would expect strength that we're seeing in those two markets to continue. And this is most likely to be just the beginning of a very long-term extended bull market for both gold and silver. So any break that you see in gold and silver should be used as buying opportunities.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.